Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand the closing action on the D Street, last half an hour of trade, and what are you seeing in terms of the benchmark index moves, the sectoral action, as well as some of the stocks that are buzzing the most in trade. We'll also get you expert views as to find out how should you be really approaching the markets and your investments in equities right now. Where are the opportunities of buying really emerging at this point in time? Also, an outlook on the earnings season as well. We'll get you all of that, but first up, a quick look at how the markets are moving. The Sensex and the Nifty were largely flat right now. They've given up most of the gains that they had garnered in the first half of trading action. The Sensex slightly below the 60,000 mark right now, just about 20 points up, absolutely flat in trade. Similarly, the Nifty hovering at 17,625. About 25 points of an uptick is what you can spot. About 0.1, 0.2% of a move on the upside still remaining. Now, when we talk about the pressure points, it's getting emerged from the Nifty Bank today. That's the index that's creating pressure, 0.6% of a decline for that one. So that's the one that has actually kept the lid on the upside as far as the benchmark index moves are concerning. When you look at the kind of move that we've seen on the Nifty Bank, it was largely flat with a positive bias in the first half of trading session today. But immediately after that, we've seen some kind of a slide, and there you can see 8.5% of a decline for the Nifty Bank. It's hovering at 40,827. The broader market still holding up a little bit in terms of the sectoral indices. You still have Realty index really shining bright in trade today. So the small cap 100 index 0.25% up. That's also lost a bit of the momentum from the early morning trade. The Nifty Realty continuing from strength to strength, 4.3% uptick for that one at the day's high level. That's the one index that has been shining the brightest in trade today. Apart from that, you have auto space names that are moving higher in trade as well, and some of the other major movers also from the sectoral indices. But time now to welcome our guest on the show. Mr. Ambareesh Baliga joins us, a well-known market expert. We already have been speaking to him about several insights, but this is the right time because right ahead of the earnings, you should know from him where exactly are the opportunities emerging. Ambareesh, welcome to Business Day TV. Always a pleasure having you with us. What is the sense that you're getting about the markets right now? I mean, like the 2023 so far, very, very volatile, but the start of FY24, perhaps a little better. Are you getting the sense that the worst may be behind us at least?
Your Honor, Sakshi, in fact, I think the last time we spoke, I was a bit cautious on the market.
Yeah.
And in fact, we are looking at lower levels. But I suppose now when you look back to in March, I think we have seen that intermediate low of Nifty closer to about 16,800, 16,900. And
Mm-hmm.
from there, the turn which we have taken, I think it's an extremely good bounce back. I cannot say whether this is a fresh, in fact, a bull run or not. That I think will be bit later, maybe in the next month or 2 months. But then in this run, I see the markets possibly going to levels of about 18,000, 18,500 levels. I mean, this is basically because whatever is happening globally is not really affecting us as much because I mean, we have seen that the banking crisis in US and Europe, I mean, that had a sentimental effect on our markets to a certain extent. But then, I mean, it doesn't have a fundamental effect on our markets as such. There is
Mm.
no structural damage as such.
Yeah.
And at the same time, we have seen that the analysts have reduced, I mean, their expectations going ahead. I mean, from the corporates, I think that is a very positive thing because markets is always expectation versus delivery. So
Yeah.
if your expectation is low and the delivery is better than that, you'll see the
Mm-hmm.
markets moving up again. And I think one of the major catalysts, at least in the last couple of days, has been the RBI policy,
Yeah.
where discounted 25 basis points increase.
Yeah.
And instead of that, we've had a sort of I mean, a hold on the rates, although we could see possibly either 25 basis points or 50 basis points increase later. I mean, that is yet to be seen. But as of now, the sort of commentary which is coming from RBI, I think it's decently benign. So overall, the situation for the Indian markets, the environment for the Indian stock markets, I think is extremely positive.
Right. In fact, I was coming to that, and I'm glad that you pointed that out as well. That, can we really assume that the local crisis that was largely on the back of, say, inflation, higher interest rates, Adani issue, the trade deficit is now behind us, and also the global crisis, which was largely behind on the back of, again, inflation and US regional banks crisis as well. All of that is now behind us?
See, I really cannot say whether it is behind us or not because I mean the crisis we have already seen the banking crisis in US. We could see possibly one or two more banks going under. But all
Mm-hmm.
that is, I mean, the effect on India will hardly be anything. I mean, it's going to be only sentimental. And as far as the rate hikes in US is concerned, possibly we could, I mean, again, see a breakout there, maybe a small, a 25 basis point hike, which to a certain extent is still discounted, I mean, in the global markets. So I really don't see any such known sort of facts as of now, which can pull the markets down.
Okay.
So, I mean, in absence of any major negative news for the Indian markets, I do not see any reason as to why the markets should come down here.
Hmm. Valuations wise, how are you looking at the markets now?
Valuations, I think it's more or less decent. I mean, as of now, I mean, at about 18,500 levels earlier, I'm talking of 6 8 months back. I mean, I found the valuations expensive, and because of
Yeah.
which possibly it's time to stay on cash. In fact, my clients were about 30 35% in cash at that point of time. In the last 10 days, I mean, they had in fact come down to about 10% in cash, but in the last 10 days, I've asked them to invest that full thing and remain
Okay.
fully invested. I mean, that shows that I'm clearly bullish on the markets, at least for the time being.
Right. Now let's also focus a little bit on the upcoming earnings, especially when we talk about the IT sector that will kickstart the
Right.
earnings season. How are you looking at this sector after the bout of recent underperformance, and is it time to now think contra ahead of the earnings?
I think one sector which will get affected because of whatever is happening in US and Europe, especially the banking space, could be the Indian IT space, where in fact on one side we are seeing that the costs are going up for them, especially on the employee cost and operations
Hmm.
cost. At the same time, I mean, about 20 24% of the overall earnings for the sector comes from the BFSI space, which I think could get affected to a certain extent. We could see, order flows slowing down to a certain extent. I think that will be felt at least for the next foreseeable 2 to 3 quarters. So IT is one space where I would still be extremely cautious unless it's a sort of a niche area like Tata Elxsi or KPIT. I mean,
Okay.
so the like other IT stocks, I would be a bit cautious. And
Okay.
when it comes to metals, I think they would continue to be under pressure. I mean, we have seen that pressure on margins in the last 2 to 3 quarters. I think that will continue. The sector where I see some sort of a recovery would be consumer and retail, where we could
Mm-hmm.
see some type of of a recovery. I think that recovery will be reconfirmed in case we have a normal monsoon. I
Yeah.
think that's one joker in the pack because we don't know what the El Nino effect would be. I think we should know
Correct.
that more towards the end of May, early June. I think that will be
Hmm.
reconfirmed at that point of time. So, other than, because of which I think one can still remain positive on consumer and retail subject
Hmm.
to that event. Specialty chemicals is one, I think, which can again possibly show some recovery. Auto sector should continue doing well. Infra and cement again would be another bright spot.
Okay.
Uh, and the other sector which I think would surprise is pharma, where we have seen disappointments for the last close to 4 to 6 quarters. I think there could be some amount of surprise there.
Hmm.
Banking, the BFSI space would continue to do well, but at the same time, I think it's more or less discounted. I mean, the way most of these stocks have moved up, especially the PSU banks, the way they are moved up, I think despite good performance, I really don't see too much of an upside for me. It could hold on.
Okay. Okay, okay. So glad you pointed out the sectors that you're bullish on in terms of the kind of earnings that we can see. But I wanted to ask you one more point on IT, despite the fact that you say that, it's likely going to be impacted with the kind of banking crisis that we have seen, and margins may take a hit, and, especially the BFSI segment, which contributes about 38% for most of these IT firms. The interesting bit this time around is that Infosys, the one of the bigger IT firms, for the first time will be speaking to the press and to the analyst fraternity after the key exits, and ditto for TCS as well. For the first time, they would also sense that they would be openly talking about the implications and how Rajesh Gopinathan's exit would really be factored in as well. So in terms of criticality, how critical are these two numbers going to be, because these are the most watched numbers from the IT space?
Absolutely, because whatever numbers we see from Infosys and TCS, I mean, that drives the IT sector. I mean, at least in that specific quarter. And like I said, manpower and the exits which have been happening at the top level, I think that's something to be looked out for. I mean, I won't be too worried as far as TCS is concerned because I see that as a smooth sort of move at the top level. But when it comes to Infosys with multiple exits, I think that is something to be a bit worried about. I would surely, closely watch as to what the management commentary is post the earnings.
Okay. You talked about consumer retail, some of the sectors that you're looking at positively. If I look at the markets in terms of, say, commodity consumers versus commodity producers. Now, last year was all about inflation, impact of margins, the
Right.
decline for commodity consumers. Is the reverse trade at play now for the next couple of quarters at all?
No, I don't think so, because as far as commodity consumers are concerned, I think they are still at an advantage. Because even if you're talking of oil,
Yeah.
unless the crude moves beyond $90, I'll not be too worried as such as far as the consumers are concerned of oil and oil derivatives. Uh, so, overall, I would still be negative on commodity producers. That's one of the reasons why I'm also negative on metals as such.
Okay.
Whereas when it comes to the consumers, I would be positive on that.
Okay. Any particular stocks that have come up on your radar of late? I mean, we've been seeing sharp jumps in the Realty pack today, for example, on the back of the business updates that we are getting, record number of sales, the best ever fiscal numbers from some of them like Godrej Properties, etc. Tata Motors also rising very sharply today on the back of the global wholesale numbers. Any of the stocks that you're spotting in terms of the buzzing action?
Reality, I would be a bit cautious at this point of time, because whatever said and done, despite like there's no further increase in rates, but the rates are decently high as of now, and because of which we could see a slowdown as far as the property purchases are concerned in the longer term. We have seen an extremely good buying of properties in the last quarter till March end. There were various reasons, including, the tax issue which had come up in the budget. But then, going ahead, I see that slowing down to a certain extent, and because of which, property stocks at this point of time, I'll not really go all out and buy. Auto stocks, like I said, I would be decently positive on that, and
Yeah.
one of the picks out there would be Maruti. The other one would be Mahindra and Mahindra. Tata Motors has been my pick, but after today's move, I would possibly wait for a few days for it to cool off
Yeah.
and then possibly buy more towards levels of about 430, 440.
Okay, but I was actually going to ask you whether Tata Motors could be the stock of the year. So that's clearly not happening.
No, it may not be the stock of the year, but I see the stock going to levels of about 530 to 550. So this is a decent about 20% plus sort of return, 20-25% return from levels of about 430, 440.
Okay. What about, Maruti, you pointed out, and interestingly, global brokerage firm Goldman Sachs has downgraded Maruti from to neutral from earlier buy rating. It has slashed their
Absolutely.
price target by 20 odd percent to 8,800, and this comes
Yeah.
just 2 weeks after. So this is a very confusing, trade that we've been able to spot. What have you been able to read through the lines?
No, see, whenever brokerage houses like these come out with a sell report, I think it becomes a buying opportunity. In fact, I think they slashed the price of Maruti, I think, by 2,200 or 2,400
Yeah.
to what, 86 or 8,800.
Yeah.
And with this, if the stock comes down, I see that as a buying opportunity. Same
Okay.
thing really happened in KPIT systems, although it's nothing. It's
Yeah.
it's got something to do with auto because of the EV part of it. And JP Morgan came out with a report that the stock can come down to levels of I think about 540 or 580.
Yes. Yes.
Although at 900 plus, I was quite cautious on KPIT, and I was saying that levels of 680 would be a decent bet. So again, because of this report, the stock came down, and in case it comes down to levels of 680, surely I would turn a buyer at those levels. I don't think we may see levels of 550 or 580 for that stock.
Okay, understood that. Well, thank you so much, Mr. Baliga, for being with us on the show and discussing all these various insights with all our viewers. Always a pleasure having you with us. The markets right now absolutely flat with a slight bias on the positive side. We'll have to wait and watch. We're just about 15 minutes away from the markets closing for the trade today, but we'll have to see whether that 17,600 remains at the closing end of the Nifty as well in today's trading action. We'll keep you posted with everything and every move on the markets, and for that, you should stick with us on Visit Today TV. Don't forget to subscribe to this platform and also continue to engage with us on our other social media handles as well on Facebook, Twitter, LinkedIn, and Instagram. Until then, many thanks for tuning in.
Bangalore, Mangalore, Kochi, Trivandrum. So this will be a connectivity between north to south, Kashmir to Kanyakumari. It will be an access control road, and the distance between Delhi to Chennai will be reduced by 320 kilometers. And by this road, it is a true sense, it will be the connectivity of this country between Kashmir to Kanyakumari. So this is to be a state of